Hi, we're online talking with Ian Woodward about the Hindenburg Omen, which has become uh, interesting of late. Now the market's getting up there. Ian is a renowned market analyst, a trading educator. He runs a twice yearly seminar in Palos Verdes with his business partner, Ron Brown. And Ian has a blog at highgrowthstock.com/Ian blog. And he has become a bit of an aficionado on the Hindenburg Omen. So without further ado, take it away, Ian.
Well, thank you, Chris. That's very kind of you. Uh, Many moons ago, back particularly in the time frame of 2005 to 2007, we had the Hindenburg Omen. And of course, as you can tell from its name, everybody sits up and takes notice when these signals fire. It's a strong warning signal for a market top. And in essence, what is happening is that the herd is buying, that's the likes of you and me, while the pros are selling. But then you say, well, what's all the fuss about? Its claim to fame is that there has never been a significant stock market decline in history that was not preceded by a confirmed Hindenburg Omen. So that's why people sit up and take notice. However, on the other hand, not all signals are in fact going to turn out to be major corrections. In fact, 75% of them are mainly small corrections, and I'll show you that in a moment. But let's go to the next slide and talk about what is this Hindenburg Omen all about. And in the early days, back in that time frame of 2005, 6, 7, etc., this is what we used as a guide to calling the shot in terms of having 5 criteria. Note they're there, and I'll just waltz through them quickly. The first is that the daily number of NYSE new 52-week highs and the daily number of 52-week lows must both be greater than 2.2% of the total NYSE issues traded that day. And if you do the math relative to the number of stocks that were available, that in effect came out to be of the order of 79 at a minimum, 2.2% of the total number of stocks. So that the smaller of these numbers is greater than 79. It's almost redundant to use that, and as you will see, that has since been dropped. But the third one is that the NYSE 10-week moving average is rising, and the McClellan oscillator, on the other hand, is negative on that same day. In other words, trotting down. And last but not least, that new 52-week highs cannot be more than twice the number of 52-week lows. But on the other hand, it's fine if the 52-week lows are more than double the new 52-week highs. That condition is absolutely mandatory. Now, a confirmed Hindenburg Omen occurs if a second or more Hindenburg Omen signals trigger. You can't have just a single one and that's it. You must have 2 or more. And as you'll see, invariably there are plenty. So net, what Jim Micah, who was the originator of this signal many, many moons ago, was trying to do was to find very infrequent occasions when you would get all of those 5 items firing at the same time. That's in essence it. And that's why it's very rare. And that's why you should sit up and take notice, because it's aimed to identify market tops. So this was the set of criteria we used prior to 2010. But since then, as I said before, item number 2 has been dropped. And we will come to what we're using now. Next slide. But before I do that, let's take a look at past history. And this, by the way, is a list of the signals of the Hindenburg Omen from 1985 to 2005. And before I forget it, Chris has provided you with all the major links that you should look at if you're really interested in more detail on all this stuff. But in essence, what I'm showing here is to pluck the ones that occurred on at that time and to show you with the arrows the significant corrections, something which is more than 16%. We do know that a bear market is 20%, so you'll give me a little license. And what this says is that there were 6 out of the 23 that are listed there, or about 25% between friends. And that number is significant in that when you have a big correction, the Hindenburg Omen will always have preceded it. But as you can see, 75% of the time they turn out to be tiddlers, or tiddly, I should say. All right, let's try the next slide and give you a few examples beyond 2005. And here on 2006 and 7, by the way, this is on my blog, which you can look at later. But the Hindenburg Omen shows there on 2 separate occasions a bunch of those orangey pink signals, and those are the Hindenburgs. And as you can see, 11% drop and 14% drop. It's something to sit up and take notice about. Fortunately, on those occasions, it didn't lead to a bear market. But it gives you the gist of what to look for. Now, notice there's a single one there, spurious signal. You can't have one. That's useless. I mean, not useless, but it happens to be a non-event, as it were. So that gives you the flavor of 2000 and 2007 before the big drop, the black swan. So now let's look at the black swan time frame, which is the next slide. And there it is. Look how there was an abundance of these Hindenburgs hitting in a matter of the last 4 or 5 months, but particularly right at the market top. And who would have guessed at that point in time that we were ultimately headed for, a 47, 48% correction over the course of 2008? I only show half the drop, by heavens. Heaven help us, help you if you were still in the market when that occurred. So, of course, now with that kind of a wallop, everybody sits up and takes notice. And of course, as I said, they don't happen very frequently. And the next occasion that we got a potential signal, I call it potential because you'll see why in a minute, is on the next slide. When in 2010, August 12, 2010 to be precise, everyone and his brother and the taxi drivers went gaga on a Hindenburg Omen. And I looked at it and I talked with a good friend. No, I shouldn't say a good friend, an acquaintance that I got to know in Berkeley Square in London, of all places. And we chatted around this particular signal. And he said, Ian, they've gone gaga here. And by the way, I don't believe that this is a true signal. And I'll show you, well, I agreed with him. And without further ado, let me move to the next slide and show you why. Because it made no sense. Well, here was the point in time. And by the way, if you look at the slide, I must confess that dotted line needs to be one tick to the right of that big, long candle. One to the right, mind you. So in other words, down there, exactly where Chris has put his arrow. And it made no sense. I mean, why would you have a Hindenburg Omen trigger after going through a 17% drop? So I said at the time, by the way, I couldn't see the right-hand side. Nobody could. The call was being made there. And I said, this doesn't make sense, but let's see what happens. So I called it, and it so turned out that, in fact, it was right. But of course, we sit up and take notice whenever these things occur. And time has passed us by. And now, of course, as you well know, with the advent of high-frequency trading, with the time 24/7 that the internet is on a buzz, the word gets out so fast that you have to at least pay attention when someone blurts out that they saw a Hindenburg Omen. And of course, needless to say, if you've been on top of all of this in the last 5 or 6 weeks or so, we've had another set of Hindenburg sightings. And let's show you that slide. And so we've come forward, of course, and here, right up to date, is the work that Chris has done. He's provided it all for us. And look, he's given it to us on a wonderful chart. You have the criteria on the left, as you can see, and he's able to identify when they strike, and therefore he has true, 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 true. And then when all four of them hit, the fifth one is the Hindenburg Omen, and there it is in black and white. And as you can see, the first hubbub was on 4:15, and but it then went quiet for the best part of about 20, 25 trading days, all the way down. And then we had two on 5:31 and 6:4. And certainly, of course, as you well know, the market indices have dropped of the order of 4 or 5% since then. And so you sit up and take notice. But the beauty of what Chris has done is to provide it all in a wonderful report like this, where there's no ifs, ands, or buts. So without further ado, I am so tickled pink that we have this vehicle now to keep us on the right side of the market. And without further ado, I'll have Chris define what it's all about.
Great.
Good job, Chris.
Okay.
Great job.
Well, thank you, Ian. That was an enlightening presentation. And what I want to do now is show in the I'll do a demo of the information I've put together and how to run the report. Okay, so now I'm going to show you how you can find the signals using EdgeRater and the Hindenburg Omen report template that has been added for the month of June. What you'll see when you run the program now is under the HGSI Woodward and Brown category, there is a new template called the Hindenburg Omen report. And if I select that template, then I see the front page of the template, which is just a brief description of the Hindenburg Omen. There is a set of resources that you can click on any one of these to go through and see the web page describing the Hindenburg Omen. There'll be a link to the video when I put that up online too. In order to run the report, you have to choose a symbol list. And the symbol list that I'm going to select is actually called Hindenburg.lst. And I'll provide this. This is going to be up on the forum as a downloadable symbol list. And it is essentially the list of NYSE all stocks. And the problem that we had before with being able to see the Omen in HGSI is that the data is coming from just common stocks. But this is a list of all stocks in the NYSE, which gives us the Omen as it was originally designed. So there's 3,255 stocks in this list. As I said before, you can get it from the forum, and I'll just show you exactly where that is. So that is under symbol lists on the forum, and you click on there. And then there's the Hindenburg.lst as a zip file. You can download that and copy it into the EdgeRater symbol lists directory. Once that's in there, it will then be available in the drop-down area here, and you can update that list using either Yahoo data, which is free data from Yahoo, end-of-day data, or if you have HGSI, then you can set the data provider to HGSI and get it from the HGSI database. Okay, so now that's set up, and I have this data running through to June the 13th. Then all I have to do is hit run. And what's going to happen is when this is running, it's actually going through every stock in that list for every day, and it's actually producing its own index of new 52-week highs, new 52-week lows, advances and decliners, merging all of that data together to produce essentially a report of 2 years worth of these signals. So because I'm actually running the video right now, this is taking a little bit longer, but normally on my computer when I'm not running the video, it takes probably around 30 seconds to produce. Okay, so that has completed, as we can see down here, and then what happens is you'll be shown the Hindenburg Omen criteria. So the way it's organized is that the date is on the left-hand side. It's showing the most recent days, so it's organized from top to bottom, but the most recent is at the bottom and it scrolls down there, so that's immediately viewable. The first column is the new high, new light, low criteria, being greater than 2.2%. There's a true in here if those conditions are both true. The second criteria is that the 10-week moving average should be rising. If that's true, there's a true in there. The third criteria is that the McClellan oscillator has to be less than 0. Fourth criteria is that the new highs has to be less than or equal to 2 times the new lows. If all 4 of those conditions are true, then a black true is put in under the Hindenburg Omen column. So basically you just have to look at the F column to see if there's an omen, but you can use any of the other columns here to find out how close we came to a Hindenburg Omen. If you want to find out more data, you can scroll to the right and you'll see all of the computations and calculations that went into making up those true-false conditions. So all of the data is in this spreadsheet. This, when you run the template, obviously all templates that are run through EdgeRater get saved into the EdgeRater reports directory, and they're saved as Excel files, so you can save these off every day or export it, manipulate it in Excel to do other calculations if you wish. And if you want to get a chart, on the very right hand side of the set of data, there's a column which is the 50-day moving average, which is equivalent to the 10-week moving average of the index of all of the symbols in that list. And I can double click on, let's say, the 531, and that should pop up a chart of the index, so I can see where that omen occurred. And because it's an index and it's an equal dollar weighted index, the chart does look a bit jagged. But I've also included in the report the SPY, so that should give you a better idea using SPY. And I'll just bring that over here. So now we can see that exact same signal superimposed on the SPY, which is the ETF which represents the S&P 500. So that is pretty much it. It's very simple. We're simple to run. Obviously, there's a lot of calculations going into processing this. But the beauty of this is that you can run this on the chosen list of Hindenburg stocks. But if you feel that that list is becoming a little obsolete, you can actually put any stocks in here that you want to kind of refine the definition of that signal. If you find that signal is not firing when you think it should be firing, you by all means can change your list of stocks to get a better idea of if there's a real Hindenburg Omen. But this list, as of now, appears to be firing when other people think that the Hindenburg Omen is firing. So yeah, Ian, that's it. Thank you for your side of the presentation. And
not at all, Chris, but I'd suggest one more thing.
Okay.
Because, of course, we've had 3 recent signals, and the prior one was on 4:15. So it may pay to just scroll up and show them that other hit. You see? There we go. There it is. So 3 hits, one on 4:15 and the other 2 as you saw.
There and there. There we go. And actually, I should also say that on Thursday night, obviously we've got the end of day data. This came very, very close to being a Hindenburg Omen. We had 3 of the 4 criteria, and the only reason that the new highs, new lows greater than 2.2% didn't hit was because if you look on the new high column here, it only came to 2.03%. But, I mean, you might call that a real Hindenburg Omen because there are various other things that go into this calculation. For instance, if a stock hasn't been trading for a full 52 weeks, I don't include it in these numbers. But other people, when they're calculating the omen, they may include it. So that may have fired as an omen in somebody else's book. So, always look for, if there are 3 signals, it pays to look on the right-hand side to see how close it actually came to being a 4th signal. So I still think that yesterday, 613, was a little bit of a warning sign because we had 8% new lows when the market actually rallied, and we had 2% new highs. So that's it.
Very good, Chris. Excellent.
Great. Thanks, Ian.
You're welcome.